Guys, folks are actually coming in pretty fast. I'm going to say good morning, good afternoon, depending on where in the world you're signing in from today. I'm very fortunate today to be joined by Rick Van Nieuwenhuyse, Contango ORE's President and CEO, and Mike Clark, Company CFO. Gentlemen, how you doing today?
Doing well, Romeo. Thanks for hosting this.
No, appreciate it. You're live from Zurich, so thanks for joining us all the way in Europe. I wanted to just let you guys know in the audience, here's the format for today's event. We're going to start with a really quick presentation from Rick and Mike about some additional context for this week's news release. Then I've got some questions of my own to go through, but then we'll jump into audience questions. I'm going to start with the ones that were sent in advance over email, but then questions in the live chat. There's a chat button in the bottom right of your screen. Please use it to ask questions at any time during today's event. If for whatever reason we don't get to your question today, I'm still going to pass it on to the Contango team so they can get back to you as soon as possible. So no worries if we don't get to it, but we'll try to get to as many as we can today. Also say, just for housekeeping, today's event is being recorded and the replay will be available sometime this afternoon. It'll come right into your inbox. But enough out of me to get into the protein. I'll shoot it directly to Rick and Mike to get started.
Again, thanks, Romeo, and thanks for hosting us on 6 here. We always appreciate the platform. Mike and I'll be making some forward-looking statements, so just draw your attention to that. We have a Q3 corporate presentation we just uploaded to the website, so we invite you to take a look at that as well at www.contangoore.com. All the dollars we'll be talking about today, we're a U.S. company, so they're all U.S. dollars. And I'll just start by just kind of giving an overview of, from my perspective, of our Q3 results, and then ask Mike to give his more CFO view of the results. I'll just point out that we are reporting on going forward on our production on a quarterly basis. In this quarter, Q3, we produced 28,000, just shy of 28,000 ounces of gold. And a little bit of silver. We sold that for a little over $62 million plus the silver, and we realized a price of $22.50, and that's a blended price between what we delivered to the hedges, and which is the 14,800 ounces, and then what we sold at spot price, the 12,850 ounces. And so when we've got a little bit more gold that was sold in Q4, so that'll be included on our Q4 statement. But our costs were $11.81. So if you like to do quick math in your head, that's roughly $1,000 margin, based on our blended realized gold price. We did receive a distribution in the quarter from the Peak Gold joint venture of $19.5 million. So it's nice to finally see some money coming back into the treasury, and we ended the quarter with $36 million. So which is about a $12 million increase from Q2 reporting. And as I mentioned earlier, we have been updating shareholders with our first campaign and then second campaign numbers in terms of ounces produced and realized gold prices and delivery of the hedges. But going forward, we will just transition to just quarterly reporting. We're not going to report specific campaigns going forward. It'll be whatever's produced during the quarter, so that just would be reporting more like a regular company. And of course, Q3 is our first quarter where we're reporting on a quarterly basis. So the last thing I wanted to just outline is our guidance for this year. We're definitely going to be towards the higher end of the original guidance we gave, between 30 and 40,000 ounces, with batch 3 that's underway right now, and should probably finish up in the next 2 or 3 weeks. 2025 guidance, it's not formal yet. We'll have a joint venture meeting here shortly and report where we'll approve the joint venture budget. And in that will be our guidance, but we're believing that's going to be, based on our discussions with Kinross, somewhere in the neighborhood of 60,000 ounces of production in year 2025. So obviously we'll expect to make additional money on the sale of those ounces. And the first priority of business is to pay back the debt. And of course, the second priority is to continue to advance our Lucky Shot and Johnson Tract projects. Continue to use our direct shipping or DSO approach, which of course lowers our environmental footprint, which reduces the permitting risk and lowers our overall capital outlay by not building a mill and not building a tailings facility. So just with that overview and perspective, my perspective on our Q3 results, I'll ask Mike to give us his more CFO hat perspective on the Q3 results. Mike?
Yeah, thanks, Rick. Good morning, everybody. We finished, as Rick mentioned, the quarter at about $36.2 million of cash, and this compares to about $24 million at the end of June of this year and $15.5 million at the end of December of last year. And as Rick mentioned, we also received our second distribution from the joint venture of $12 million subsequent to quarter end. And so for the quarter, we reported a loss of $9.7 million, or a loss of 81 cents per share. And that does include a non-cash expense of $22.9 million, which relates to the unrealized loss on the mark-to-market derivative contracts for the hedges. And so this compares to a net loss of $13.2 million, or a loss of $1.47 per share for Q3 2023. Now, the primary reason for the reduction in the net loss is in the 2024 period is due to the Peak Gold JV commencing production at Manh Choh and resulting in income from our equity investment in the amount of about $28.5 million. And this compares to a $5.6 million loss in Q3 of 2023. In addition, the company did report a $28.8 million loss on the derivative contracts in Q3 2024, which compares to a $2.7 million loss in Q3 2023. On the statement of cash flow for the 9-month period, September 30th, 2024, I'd like to highlight that the company had positive net cash provided from operating activities in the amount of $10.6 million. And this compares to net cash used of $7.7 million for year-to-date 2023. And as I mentioned, the primary result is because of the commencement of production at Manh Choh and the receipt of the company's first cash distribution of $19.5 million from the Peak Gold JV. That completes my portion of the presentation, and I'll pass it back to Romeo.
Thanks, Mike. Appreciate it. So I still rarely get the chance to grill you, Mike. So I got a couple of questions for you, if you don't mind. Just in looking at the gold sales and cash costs, to my eyes, it looks like they don't show up in the kind of traditional way on your statements. So I'm curious just if you could clarify why that is and how a reader should look at it to kind of better understand those.
Yeah, no, it's a good question, and they're quite complicated, these financials, and a lot of it has to do with the fact that we only have a minority interest in Manh Choh. So we only own 30%, so we don't consolidate those results. And so the first thing I'll mention is, the portion of our profits related to that all comes through the investment in equity income, which you see as a gain in the financials, just below kind of it's in operating activities, but just below all the main expenses. So you see that $28.5 million coming into the income statement. So that's where you kind of focus on the profitability of the operations, which is our 30% share of those profits. The gold sales, the revenue and the cost of sales that you would typically see in a mining company, those don't show up as top line. And the main reason is because selling gold and silver is not core to our business as it is today. And so, and because of the way that we're set up, Manh Choh gives us our 30% of gold. And the whole reason they do that is just so we can deliver into our hedge agreements, and then we sell the remainder at spot. And so what you would actually see if we had that in our financials as revenue and cost of sales, you'd see revenue of, say, $60 million, then you'd have cost of sales of just slightly less than that because we're paying back the JV for that gold and silver. And so this avoids confusing the market and making it look like it's unprofitable when it really is. And those sales and cost of sales actually just flow through the Peak JV. So I'm not sure if that's clear, but it's not normal, and it took a while to figure that out and get there.
No, it's helpful. I do appreciate that. But on that, do you expect any more cash calls from the JV?
Currently, we do not expect any cash calls unless there are some unforeseen expenses that we're just not aware of. But the last cash call was in July for $4.1 million, and we don't expect any more going forward.
Great. And what do you reckon your debt balance will be at the end of this year, and what do you expect for the end of 2025?
Yeah, our debt balance is currently at $52 million, and that's where we expect it to to end at the end of this year, and that's for the credit facility. And right now we're scheduled to pay down another $42 million next year, so we should finish just shy of $10 million at the end of 2025.
Great. And this one I'll shoot to you, but I'm eager to hear Rick's perspective on it too, and that's the $36.4 million in cash, I think you said, and strong cash flow, which I don't get to say about most mining companies. From Moncho, how are you thinking about capital allocation between debt reduction, Lucky Shot advancement, Johnson Tract development? I know there were a lot of questions in email about that. Just curious of what that looks like.
You want me to start with that? From my opinion, my focus is making sure we pay down the debt on schedule, on time. And if we can accelerate that, we'll look to do that. And then ensuring we deliver to the hedges. And outside of that, that's where Rick comes in to decide how he wants to spend any excess cash.
Yeah, I guess I would just say we love our bankers, but we like to also say goodbye. And just the first order of business is really to pay down the debt. And then advancing our projects. We have a plan for Lucky Shot. We've talked about that, getting the drilling done and outlining a mineable resource in the neighborhood of 400,000 to 500,000 ounces. If we're producing with that mine plan, say producing 40,000 to 50,000 ounces, with a sort of a 10-year horizon, we think that makes really good sense for Lucky Shot. It'll take a couple of years to execute that plan, and then likewise. For Johnson Tract, it's a little longer timeline because the nice thing about Lucky Shot is it's fully permitted as a mining operation, whereas Johnson Tract, we still have more permitting to do to be able to build the tunnel, to get underground, to be able to do the drilling. So it's just, it's more of a stepwise process there. So, clearly our revenues are going to depend on the price of gold, which just took a nice big Trump dump. So if there's pressure on the gold price, we're going to have to go slower, and because again, we want to get out from underneath the debt is the most important thing, and we're still going to have good strong cash flows with producing 60,000 ounces of gold, but that margin depends on the price of gold. So if the price of gold is going to continue to tumble, we're going to have to watch how we spend our money. And most important thing for a junior company is not to run out of money.
Yeah, that's true.
I see Mike shaking his head. He's definitely agreeing with me on that one.
That's the CFO head shake. I'm familiar with that. I did notice, this is back to you, Mike, that there was a $718,000 income tax expense, which I believe is new for Contango. So yeah. I'm curious, there were no losses to shelter that income?
Yeah, no, it was. It's purely a direct result of the high gold price we had during the quarter, and the fact that you can only apply 80% of your losses carry forwards against your current year income. So unfortunately, the JV made too much money in the quarter, and we had to estimate a tax accrual for the period. And we'll do our best to bring that down by the end of the year, but that was what we had to come up with.
No, appreciate that.
That's a terrible thing about making money.
Yes.
Uncle Sam needs his share.
He always takes his piece, yep. One thing regarding, and just get into Johnson Tract real quick, regarding the drilling program, I'm curious if you could elaborate on what you're seeing from the hydrological testing and metallurgical work that's going on, as I understand it, alongside the resource drilling.
Yes, I mean, okay, let's start with, there was infill drilling, so we'll definitely be reporting results on that for all the holes that intersected the ore body, which was all the holes. Because it was purposeful drilling to do infill drilling, to do the geotechnical and the hydrologic work. The hydrologic work is really just to get more data from the top of the deposit all the way to the bottom of the deposit, understand how much water there is on the ore body side of the fault. As you recall, there's a main fault, the dacite fault, that separates the unmineralized dacite intrusion from the mineralized tuffs on the other side. And so that's the main purpose, is to understand how much water is over there. So you do these hydrologic pump tests and monitoring tests. So there's not like a lot of, we're not like looking at the holes and saying, oh, there's a lot of water, there's a little water. It's really more about water chemistry, or is as much about water chemistry as it is about how much water there is. For the next step, getting the underground incline tunnel in, which we still have to get permitted, and we've started that process with the state. That's a state permit. When you're building a tunnel, you're a mine, even if you're not, processing, or moving ore. You're still technically a mine, and you're under MSHA, which is, for federal oversight. So that's the next step, and we're highly confident there that we know that we understand how much water and mainly the water quality that we have there. So, but that's what we're permitting. We had a good meeting with the office and management and project management from the state. That was actually a couple of weeks ago when we had the Alaska Mining Association convention. We also, since we're all in town, we also met with the it's called OPUMP, project management, Office of Project Management. So, and that's the group that issues the mine operating permit. So it'll take about a year, 18 months, which is kind of, good timing. From next year we build the road, the following year we build, get the equipment in and start building the tunnel. So, and it'll take about a year to build the tunnel, and then plus minus a year to do the drilling and do all the feasibility level mine planning.
That makes sense. While we're on Johnson Tract, there were a number of questions that came in an email. I know we've already kind of touched on this, but I can basically summarize all of them together as, when are we going to hear more about Johnson Tract? So I'll shoot that to you now. Hopefully that'll cover most of the email.
Yeah. So main thing is we'll have our drill results out, and I'd say within a week or two here. I think I just saw that they're starting to put the press release together, waiting for final QA/QC on all the results. And look, I want to heads up here. This is all infill drilling, so we're not trying to build resource here. We're trying to upgrade inferred resources to indicated. And the lion's share of the drilling we did was in the top 1/3 of the deposit that we can access relatively easily from the surface. The rest of the other 2/3 of the ore body is not conveniently located from a geometry standpoint when you got two big mountains going up on either side. So that's why we need the underground and why we have to go permit that. Because the level of drilling that you have to do for a feasibility study would just be prohibitively expensive to do it from the surface. Plus, you're going to mine the ore body underground anyway, so put the development in and get all that done. We've done all that work at Lucky Shot, and so we kind of just wash, rinse, repeat, do the same thing at Johnson Tract. So, and then the next thing is so the press release in the next week or two here on the drill results, and then we're doing a PEA, preliminary economic assessment, and it's on a direct shipping ore model. So we've got a place that we're going to be sending this ore to. Now the ore is polymetallic, so it's copper, lead, zinc, gold, silver, and so we're going to require a specific kind of processing to produce a flotation flotation concentrates. A copper concentrate that'll have some gold with it, a zinc concentrate that usually just has zinc, if you're doing a good job of just floating the zinc, and a lead concentrate that'll have most of the silver, since we know that most of the silver occurs with the lead, and then a gold concentrate. So now the working assumption here is we're sending this place to a place that has an existing mill and a tailings facility, but it's not going to have the specialized flotation equipment. So that capital will be included in this assessment. And then, of course, the transportation plan to get it to that location. Since we're very close to the water, the working assumption here is we're transporting the ore down to a barge access point, and then barging the ore to to the existing mill. So we'll see that PEA come out. I'm hoping before the end of the year, but as a lot of these things go, if you don't get it done by mid-December, it's probably not getting done until mid-January. So I won't say we'll absolutely get it done this year, but that's certainly the objective, is to get that out. And it's a little different than under Canadian Rule 43-101. In Canada, you can put your results out and then file your report 60 days later. Under SK 1300, that's one of the big differences in U.S. reporting. Under SK 1300, you can't do it. You have to put the report out the same day. So no flashy press releases and then the formal report 60 days later. It's got to be filed at the same time. So, and we want to do a good job, so we're crossing all the T's and dotting the I's.
No, great. The other question that came in on email, that was almost all of them were about Johnson Tract. There's one that came in, somebody said that you had a long time ago mentioned the possibility of thinking in the future about running a dividend for Contango. Just curious as to your current thinking on that.
I'll let Mike weigh in on this too, but again, philosophically, pay the debt off and obviously advance our projects. So I think it's going to be a few years before we're in a place to think about that. But I would actually say that is, selfishly speaking, as a shareholder, I'd love to see us either pay a dividend or look at a share buyback. A lot of people have commented to me that what they don't like about dividends is that they have to pay taxes on them. I get the impression that a lot of people just don't like paying taxes. So but it is, either way, it's obviously a benefit to shareholders, and that's certainly the way we're thinking. That's why we like the tight share structure that we have. I know some people say, you should roll your stock forward 100 to 1 or something like that, and I'm like, well, I don't want to be like everybody else. And if we're in a position where we're making $5 of free cash flow or something like that, and we've got 12 million shares, a dollar dividend goes a long way. So that there's certainly philosophically that's where our head's at. But it's definitely going to be a couple of years before we're seriously thinking about that. So just to put it in perspective. Mike,
not sure what I could add to that. I think if we're producing from more than one asset, I think that also kind of will help to be in a more steady position. And so once you kind of start doing the dividends, we want to continue. So I would think best case scenario would be kind of 2 or 3 years out, and with the debt behind us.
Yeah.
Great. Jumping into questions from the audience now. There's one from Tate who asks why production drops in Q4 from Q3. Based on 2014 production guidance and the Q3 production level?
I'll start, Mike, and then maybe you can fill in from a different perspective. But so I mean, normally in a half year, so we started production in July. So normally we'd have two campaigns. Because this was a startup year, we basically get an extra campaign of campaign 3, but it is going to be lower grade because basically it's taking a lot of the lower grade material that's been built up over the course of mining for a whole year. And keep in mind, we started mining in November of 23 and building the stockpiles. We only started transporting then. We started mining in July. We started transporting in November. So those stockpiles got built up, and obviously, you always want to transport your better grade material first, and you can do that's how you'd run any sort of mine. But you also have a footprint constraint. You only have stockpiles that you can get so big. So basically, campaign 3 is trying to get rid of a bunch of that lower grade stockpile and blending it with sort of regular grade material and making room on the in the stockpile area at Manh Choh, just so you can keep a steady operation. So that's kind of the nature of the third campaign. It's a bit of I call it almost a cleanup campaign. So it's smaller and it's lower grade. So that's the main drivers.
Yeah, I don't think there's anything I can add to that, Rick. You covered it all.
Great. This next one I think is for you, Mike. It's somebody asked, the presentation shows potential 2025 free cash flow per share of $6. He wants to know if that's the checks from Kinross for Manh Choh, or is it net for exploration expenses, corporate expenses, and capital expenditures?
That would be on the Manh Choh production. And that slide came out of one of our banks that follow us, one of our analysts.
Great. Maxim Group, we already covered capital calls, but if you have any additional questions about that, let me know in the chat. There's one question, and this is about hedges. I know they make fun of us on Twitter for talking about hedges, but we do get questions. Somebody asks, looks like you hedged 54% of production in Q3 24. They want to know if the amount you hedge is going to vary quarter to quarter, and if so, why?
Yeah, the amounts that are hedged basically follow the feasibility study, and so they change each quarter to kind of mirror what was in the feasibility. And so next year we have about 60,000 ounces that are hedged, which will end up leaving just 40,000 for 2026, and it varies each period. And and so for this year, we basically just followed the same approach of just selling kind of delivering 60% of each campaign into the hedges and selling the remainder at spot, because the campaigns did not line up directly with the hedge dates, and so you had to kind of manage the program and just make sure you didn't come up short.
Yeah, Romy, I just want to add that I wasn't sure the way you asked the question. It almost it seemed like the person asking the question was thinking we're sort of proactively hedging. These are all hedges that are in place and were necessary to secure the debt financing. So just, we're not purposely selling gold at a lower price.
And sadly, we locked those in when gold was $1,900.
$1,900. Yeah.
It went up $800, $700 in less than a year.
Sure. And in the same kind of area, but it's a broader macro question, so I'll throw it to both of you. But Jan Van Morsel asks from the chat, what's your outlook generally for the price of gold? And although this relates to what you just said, how does that affect your hedges? But I think we've already tackled that. But I'll throw it to you guys for the big old question of what's the outlook for price of gold.
You want to go first, Mike?
Oh, sure. Well, I don't like to guess the price of gold because I'm usually on the opposite end of that. So I won't comment on that. But with respect to the hedges, if the gold price goes up, we continue to make more money. The hedge liability also goes up, but we are more profitable. We just have to kind of give half of it back to the hedges. But it's a good thing for us.
Yeah, I want to just explain when Mike says hedge liabilities. Those are unrealized losses. So if we don't deliver the gold, we're in trouble, because that's what that means. If they're unrealized, because that means it didn't happen. And as long as we keep producing gold and delivering into the hedges, we're fine. We're just making less money. But it's a terminology that the financial community uses that I think sometimes confuses shareholders. But on the other side, I'll answer the question about gold price. I think we need Elon Musk to mention to President-elect Trump that he can be the gold king as well as the crypto king and the king of debt. It's been interesting, an interesting 2-week period to see crypto just go crazy, and we've had and gold's been not been the benefactor of that trade. It's buy crypto, short gold, and so I think the fundamentals for gold are still really good. I think I'm sure China and Russia and Iran and Turkey, all the central banks who have been buying gold are loving the $200 discount that they just got, the Trump discount. But I think it's my view is it's going to be relatively short-lived, because as Trump is fond of saying, he's the king of debt. He grew his empire on debt, and he's not afraid of it. So we have $36 trillion of debt in the United States, and in 4 years, not my guess, other people, expert people who look at these things say our debt's going to be $50 trillion. So at some point, that's a big number. I don't know when that becomes actually a big number and scary number, but it's a big number already. So
beyond a trillion, it's just gravy, right? It's hard to think past that. One question that came in over email during the event is somebody really excited about Lucky Shot specifically and wants to know what the next catalyst there is.
Drilling, as I think we've heard our president-elect say, "Drill, baby, drill." So that's what we're going to do. The mine is permitted, so we're all set up for mining and whatever additional work we need to do underground to access the drill points we can do. And then it really is just drilling. And again, we're underground right in the footwall of the vein, so they're relatively short holes. We're looking at overall, again, over a 2-year period, drilling about 15,000 meters underground and maybe 5,000 or 10,000 meters on the surface. And obviously, we won't get started until next year, so that that's a next May sort of is when I would expect that we'd get in there, start clearing snow and getting access to the underground. And we keep the road open in that, so just because you want to maintain things on an ongoing basis. But the activities, won't get really started till next summer. So stay tuned for that. And obviously, we'll just caution, we will be looking at the gold price, and if the short gold and go long crypto is still here with us in 6 months, we're just going to have to be aware of what the gold price is, because again, the first order of business is to pay back the debt. Second order of business is to advance our projects.
Great. Speaking of advancing projects, somebody in the chat notes that the Q3 24 exploration expenses were about $3 million. They want to know if you think quarterly exploration expenses are going to grow from there and what that's going to look like.
You want me to start with that, Rick?
Yeah, go ahead, Mike.
Sorry, that $3 million related to the Johnson Track surface drill program we did this summer. So you would expect to see very small exploration expenses for Q4, Q1, and then once we give our guidance for next year on what exploration we're going to do, you'll see it ramp up. But it's all kind of year by year and what we decide to do and put in the budget. But this year was a $3 million budget, so we spent $3 million.
Yeah, and just to cover it off, in case people are wondering, we did the joint venture spent $4.7 million of exploration on the Tetland lands, but that's captured inside the joint venture, and so it doesn't reflect on our books.
Right. One more question about hedges, with apologies to Twitter. Seb asks, how far forward in years are you hedged?
Yeah, we're hedged. We have about 110,000 ounces remaining, and those we deliver into those next year, and then 2026. And so there's about 40,000 of those ounces are in 2026, with the rest going next year.
Great.
So, unhedged that.
Yeah, appreciate it. So Vitaly from the chat, I think I covered half of your question already. But just curious if there's an expected revision or additional guidance on AISC estimates.
I'll just say we'll have I think in our year-end financials, which will be in February, Mike?
Early March.
Early March. We'll have not a full year, but a full half year of production from 2023, and so I think that'll be we'll have all the numbers, and that'll be more reflective of a true AISC.
Yeah, and I think as we look to give kind of our guidance for 2025, we'll whatever information we get from Kinross, we'll look to incorporate that, and if the numbers change, we'll update the market as soon as we know. Great. Based on estimates.
And I know we're bouncing around, but from the chat, Ikiwas asks, is there any exploration currently at Manh Choh, and are there any discoveries? And throws an exclamation mark at the end of it.
Exploration was wrapped up, let's see, almost a month and a half ago or so. And we actually will have a joint venture meeting later, and I'm sure we'll see what the results of the exploration program were. And then we can, obviously, if there's significant results, we'll certainly report those.
Awesome. And I got one last question for both of you, unless there's additional ones from the audience while I'm asking it. I like to ask this at the end. I'll start with you, Rick, and then go to you, Mike. What are you most excited about in the next near future for Contango?
I just, making money and producing gold. I mean, it was very exciting to hold that bar of gold up and say, okay, this is from start to finish, finding a deposit, outlining a deposit, figuring out a path forward. I think we can repeat that success with the cash flow from Manh Choh, with advancing Lucky Shot and Johnson Tract in much the same way. I'm excited about our model. I think it is a little different, but it does require us to focus on high quality, high grade deposits that are close to infrastructure, so we don't have to permit a bunch of that stuff, and relatively simple, high quality ore bodies. I mean, both Lucky Shot's high quality because it's really good grade, and it's a simple ore body, simple metallurgy. And Johnson Tract, again, high quality, not too many underground ore bodies, average 40 meters wide. That's a bit of a beast of an underground. It's not really technically a vein, but it's a vein breccia zone. So it's just a nice ore body to mine. And I think there are other opportunities like that for us out there, and we'll take our time. I think we're just in a really good position. I think we just have to be patient. We have to also look at where the gold price is and what our margins are, and just not to get too far ahead of ourselves too quickly either. We don't want to. The worst thing you can do is for a junior company is run out of money. So
sure. Mike, I'll throw you the same question.
Yeah, no, and I'll echo Rick on. I'm looking forward to seeing profitable financial statements and earnings per share, which is tough to do as a junior mining company. And getting out from under having this debt and moving Lucky Shot forward and Johnson Tract. I think that's going to be exciting to put those both in production and have streams of cash coming from 3 different projects and growing this company to $1 billion company. That's what excites me.
Awesome.
And I heard it here, $1 billion company.
Yeah, it's a formal prediction from Mike Lick, CFO.
Definitely a forward-looking statement, by the way. Very, very forward.
Yeah, I'll throw a slide up. There's one very direct question from the chat, which I think will be fun to end on. I'll throw it to you, Rick, but Mike, if you have any additional thoughts on it, please do. Seb asks, as a potential investor, why should I get in now and not wait for the debt to be repaid?
Well, in 2 weeks, we've lost about $5 of value based on a Trump trade of crypto going crazy. And maybe crypto's worth all that. I don't know. But I know based on our cash flows that that's a hell of a steal, buying the stock for $18. So, your timing is really good to be getting in as an investor in Contango, because we've got a good plan, and we're just going to continue to execute. So, as Mike said, we want to grow this company. We've got a strong portfolio of high quality projects. Our three projects: Manh Choh, Lucky Shot, and Johnson Tract. And we've got a plan that just makes a lot of sense. And it's a simple plan that we can execute. So, we're not here telling you we're going to raise $1 billion to go, build a big low grade mine in the middle of nowhere. There's a lot of stories like that. So we're not that. We're focused, and we're focused on high quality projects that we can process at existing facilities elsewhere and they can afford the transportation ride. So whether it's by truck or rail or barge, or all of the above, that's the plan we're executing on.
Awesome. Mike, I'll throw it to you if you got any additional thoughts on that.
Yeah, I guess I think if we can continue to demonstrate profitable operations, quarter over quarter, I think there is potential for a re-rate on the stock based on cash flows and how much money we're making when you compare us to our peer group. In addition to that, I don't think our stock gets a lot of value for Lucky Shot or Johnson Tract. So I think as we kind of advance those projects here in the near term, we may get additional value there. Because right now I think we're just valued based on Manh Choh and potential cash flows there.
Certainly,
Awesome.
the analysts would agree because their valuations are all significantly higher, and we can't flash those up. But you can go online and if you go to our corporate presentation, our analysts that cover us are listed there. And from what I understand, if people email them, they're happy to share their work because obviously that's why they cover the company.
So Rick, Mike, thank you so much for going through all the questions today. Everybody who joined us, thanks so much. If you do think of the perfect question to ask right after the event ends, as I often do, please still send it in. I'll make sure the Contango team gets it and gets back to you as soon as possible. But otherwise, Rick, Mike, thanks so much.
Romeo, thanks. And again, thanks to the Six for the platform here. It's great. Thanks
Awesome.
much.
Have a great afternoon, guys. Talk soon.